The stock market ends the year strong. So what do Americans need to know about their investments and the economy going into 2026?
Well, Dr. Gina, thank you for having me, and Happy New Year to everyone.
Sure.
I think that the bull run that we've seen is unlikely to change, at least in the first half. Why is that? We see the benefits of President Trump's policies coming into play now. The Fed is easing monetary conditions. We saw in the second half of this year that GDP in the U.S. is accelerating, so that should continue due to tax cuts, tariffs easing, lower interest rates, all of this. Now, hopefully this benefits Main Street. I've talked before about how Main Street's been struggling, that we've had this split between the Ferrari and Dollar General economies where the top 10% is doing great, but Main Street's struggling. Hopefully that's going to change. Real wages have to come up. But in the meantime, Wall Street and asset values are likely to continue to grow strong, at least for now. I have sort of 4 investment themes around this, which I can get into, but my general outlook is that the positive vibes on Wall Street and with stock prices, commodity prices are likely to continue. I can jump into investment themes if that's helpful.
Absolutely. Well, precious metals like silver and gold have reached new highs, but when precious metals are strong, does that deflate the worth of the U.S. dollar? And what does that mean for the economy?
Well, I think you had the relationship just a little bit in reverse. In other words, it's the debasement of the U.S. dollar that's providing at least one source of strength for hard assets, whether it be gold, silver, or otherwise. The challenge is, and this is one of my investment themes, is what a lot of people are calling the debasement trade, the idea that since deficits and debts aren't being addressed right now at the federal level. We've got $38 trillion in debt. We're putting on over $1 trillion in interest. That's not going away. The U.S. government can't default, can't tax it away. So the only alternative is going to be to inflate it. Now, when you see the Fed and other central banks around the world easing conditions, rates are coming down, pumping liquidity into the system, these factors will renew inflation if the economy continues to grow. That means that holding cash, you're losing purchasing power. We know that the dollar's lost 20% since 2020, 40% since the year 2000. That's been the problem with cash over this time. Equities mostly keep up with inflation. To your point, hard assets, whether it be gold, metals, commodities, real estate, tend to outpace or at least keep up with inflation during times like this.
Okay, Michael, I'm going to break this down, ask you a very simple question. Many of our viewers right now have one of these. 401k concerns. What should the average American know going into 2026 in regards to their 401k?
Well, whether it be a 401k, IRAs, or other means, it's always important to be able to establish a savings for your future. The nice thing about these programs, and they're too complicated, I don't want to get into all those details, but these programs allow individuals to put aside money, tax-free or tax-deferred at least, and to be able to store up for the future. Once they're there, you've still got the same decisions to make about what to invest in or not. But these are always a good idea to prepare for the future, to save up for retirement or otherwise.